Is college worth it?
Well, it may be. It may very well be. There is a significant income premium on average, but there's really not enough information, I think, out there. There's not much transparency around college cost, debt cost, how much you can expect to earn by major when you graduate. So I think it's very difficult for students to make a rational economic decision about this. And I freely admit that, there may be other factors besides monetary that will drive a student's decision to go to college, and college is an enriching experience. I want it to
but
be
if you're a young
available.
person, if you're a young person today,
Yep.
and let's say you're a young person without money, so you're going to be going into debt to go to
Yep.
college.
Yep.
What should be the calculus in terms of your
So
decision making,
right.
your thought process around, okay, I'm going to do this. We've read all the headlines. If you go to college, your chances of success historically are significantly better than those with a high school diploma.
Well, that's true if you graduate, and less than 60% of students do so. So I think, first of all, they need to decide if they're going to borrow. They need to be committed to finishing that degree. They need to pick a good quality school that's got good graduation rates, that's got good job placement rates, that will be candid with them about what the likely cost, if it's a four-year degree, what that total cost will be, and clearly how much of that's going to be financed with debt and how much that debt's going to cost. Those are just basic factors that anybody would need to make a decision about the economic justification for a college degree. So we don't have that level of transparency right now, and I think that's unfortunate.
John, what do you tell kids when they talk about college?
First of all, I tell kids that one of the coolest FDIC chairs ever was Sheila Bair. She went to the hood with me.
Hey,
for those who don't know what that means to be in the inner city, she went to the inner city with me when she was FDIC chair. I tell them that education is the ultimate poverty eradication tool. When you know better, you do better. But also, I mean, this system is so screwed up right now. I think this could be the next subprime crisis, student loan debt, if we don't manage it properly. And this situation is so screwed up right now because we taken a public asset and made it a private asset, which is college education. And unless you can track the student loan debt to a job, and make sure you can pay off the debt with the job, I'm not sure what we're doing. We're sort of rearranging the deck chairs of the Titanic. I love what she's talking about basically embedding financial literacy into the higher education process on the back end, more transparency. We keep in mind, this is personal to me because most people getting these student loan debts are minorities. Almost 90% of African Americans who go to college are getting a loan, and they're dropping out, not because they're not smart. They're dropping out because they're stressed out financially and they got too much month at the end of their money. And the system is not working for the least of these God's children. And most wealth in this country came from poor people who struggled really hard and made it from nothing. So I think we need to be investing heavily in the bottom of the pyramid, not with a handout, but with a hand up. And financial literacy, both on the student side and on the structural side, meaning more transparency.
Meaning it should start before college, though, too.
Absolutely, K through college, no doubt about it.
Hey, Sheila, you've long talked about income share agreements, which I'm fascinated by. The whole idea, effectively, that you don't take on debt, but actually that the instrument itself is a system in which, effectively, for some of these schools, you go to school for free and you only pay it back as part of your income. Now, some people think that this is indentured, servitude.
It's called partnership.
Like debt isn't. So you always have an affordable payment. It protects the students who may not graduate or who may graduate into a bad job market. It's based on an affordable payment based on what you're earning. So it's much better than debt, which is a very fixed, rigid amortization of principal and interest. And John's right. This problem is falling disproportionately on minority families. The Parent Plus loans as well are disproportionately hurting minority families. And so especially for students that may be lower earners, income share is a much better system than the debt system we have now.
Here, we blame financial literacy. We say the students drop out, this and that. Why have we not created a system, an incentive system for the schools themselves? Isn't the problem that education has cost so much? There is no accountability. There is no incentive to actually make sure you don't drop out.
That's right.
There is no accountability to make sure you get a job when it's all over. I've talked about the Lambda School, which I'm fascinated by, which is an income share agreement school, where the loan is taken on by the school. So actually, the school doesn't get paid. If you don't get a job, the school doesn't get paid.
That's a great idea.
Andrew, that's the church of what's happening now. What have you done for me lately? That's exactly heading in the right direction. And Sheila is extraordinarily right on this point. point, and we should be more progressive and innovative about how we reimagine education. I think, Sheila, you're about to say something on this, so I don't want to step on your talking point. Go ahead.
No, I just, one of the beauties of ISAs is requiring colleges to provide some or all of the funding so that, you know, if the student graduates, gets a good job, that income share agreement will recoup the college's investment. If not, they will lose. It does align economic incentives. Right now, all the risk is on the student and taxpayers ultimately if the student defaults. The colleges get the proceeds of the loans, but they don't suffer any financial consequences if the student does not succeed.
And adding insult to injury, most of the African Americans who are getting the student loans are also going to private colleges who may not have their best interests at heart, who are not giving them all the information they need. So their profit is profit.
Sheila, are for-profit schools, for-profit education, is that a problem? Because I know that the dropout rate can be particularly high at some of those schools. Well,
statistically, you're certainly seeing much higher debt enrichment at these for-profit schools and higher incomplete rates and higher default rates. So yes, that's true. But that said, I don't know if it's so much a factor of being for-profit or just being poor quality, because I hate to say it, there's some nonprofit colleges that also are not doing a very good job.
They're not doing a very good job, and by the way, if you look at college tuition prices, that's another huge part of the problem. Outpacing inflation at any rate. So when pressure goes back.
And I'm not jamming up for-profit colleges because, frankly, if the for-profit colleges did what Andrew just said, which is to put an incentive on the back end, that you got to place them into a job, they might be performing better than anybody else.
We shouldn't put them all in the same category.
That's exactly right.
We need to define for-profit after the latest stuff, too.
Yeah.
Like they're all for-profit in one way or another.
Most college universities are a business. Some of them have a non-profit status. Most things are a business.
Hey, Sheila, real quick before we run, do you see any movement on this topic? And I say that almost sadly because we've been talking, you and I and so many of us have been talking about this issue for now many, many years, almost a decade now, at least, if not more. And it seems like, unfortunately, we've talked and talked and talked, but it doesn't seem like there's any real...
Well, I think to their credit, some colleges, I did a report for the Manhattan Institute with my son, actually, who's a good higher ed economist, taking a look at the growing number of schools that are offering their own ISAs. So they're taking the initiative on their own. And we argue in that paper for at least a federal pilot to try ISAs as an alternative to debt. I think there may be some chance of that. But in any event, colleges themselves, the better ones, frankly, are taking the lead on this.
I was at Clark Atlanta University yesterday, a black HBCU. And they have an Office of Financial Literacy at the Office of the President because they want to reimagine the whole educational experience and do really what you guys are talking about, which is to try to connect education with aspiration, like plugging a socket in the wall. And you know, if a kid wants to teach school versus to go on Wall Street, we should want kids to aspire at every level, and it shouldn't be a tax on you because you're choosing something that pays less because it actually may give society more value. But there should be some escalation that's tied to that allows you to pay as you go. And that's, I think, what we're talking about here. No, we're not talking about a giveaway program. We're talking about an Invest in Us program.